Like I said, this is a classroom. I want you guys to learn. I want you to walk away with some type of value or something like that, okay? I'm from the south side of Chicago. Grew up over in Woodlawn. Main location is on 6426 South Cottage Grove. We just opened up there on New Year's Eve, January 1. So we've been active. I've been in business for 17 years. It'll be 18 in November. Alton Bell, the second enroll agent. Anyone know what an enroll agent is? Well, let me tell you, enroll agent is licensed by the Department of Treasury to represent clients and practice before the IRS across all 50 states, okay? You can see I'm an enroll agent, certified tax coach. Reducing taxes is another tool for financial freedom. Does anyone know how much it costs to start an LLC in the state of Illinois? $350 now or somewhere less. $350? Actually, it's $175. Okay. Yeah, it doesn't cost much. If you want to expedite it, they charge you an extra $100 fee. From there, you have to pay an annual fee of $75 to renew your LLC. Okay. Does anyone know what an LLC, what tax form is filed on? Is it filed on? So when you form an LLC, you have to get with a tax professional to decide how you want your LLC to be taxed, okay? So when people say, I got an LLC, I say, how's it taxed? And they look at me like a deer in the headlights because there's certain ways of how LLC can be taxed. I got all the tax structures that a LLC can be taxed here. Sole proprietorship. If you got this, write 1040 on the top of there. We all know what a 1040 is, right? I hope we do, right? A 1040 is basically your individual income tax return. All right? That's just a sole proprietorship. That's mean your beauticians, your barbers. You could be a sole proprietor as a consultant. I could be a sole proprietor as giving speeches or things or teaching classes of that nature. That's what a sole proprietorship is. So an LLC, so it could be an LLC sole proprietorship. That's step one. That's the easiest one that you can form, okay? All right? This next one is general partnership. At the top, write form 1065. It's called a 1065, okay? That's a partnership. That's like if me and you decided to open a business. We're partners. You need two or more partners, okay? That LLC can be a partnership. Once you form your LLC with the state of Illinois, the next step is explaining or going to the IRS and say how I want to be taxed. You can leave it as an LLC, go get an EIN and say, hey, I want to be taxed as a sole proprietorship, 1040. The next step is, well, you know what? I'm growing. I need a partner. I need someone to help me grow this business. We could be a partnership. This is typically like doctors, architect firms, attorneys, things of that nature, 1065. Also, you'll find a lot of real estate partnerships in that as well. Not going to go too deep, but that's how it's taxed, okay? Now, the LLC, I got that there. The LLC is just the legal entity that can go either way. The LLC does not have a form with the IRS. The next one is an S corp. Anybody heard of an S corp? Is anybody an S corp? Okay, S corp. S corp is basically, I could be an S corp, right? I could be a sole member S corp holder. I can get my LLC, go to the IRS, and send in form 2553 and say, I want to be taxed as an S corp. Okay? You have to get approved by the IRS to be an S corp. I give you $100 if you can find a form that says it's an LLC tax form. Because it's not one. It's just a legal structure. It became popular in the 80s amongst attorneys to try to seal from limited liability. But from a taxability standpoint, you need to get with a tax professional. The next one is an S corp. Anybody heard of an S corp? Is anybody an S corp? Okay, S corp. S corp is basically, I could be an S corp, right? I could be a sole member S corp holder. I can get my LLC, go to the IRS and send in form 2553 and say, I want to be taxed as an S Corp. Okay? You have to get approved by the IRS to be an S Corp. An S Corp is typically just one person. You can have other investors and things of that nature. But an S Corp is like the next step from going from, come on, computer. The S Corp is basically, you typically want to have yourself on salary, on payroll, or something of that nature. And it's taxed, typically, it's taxed at your individual rate. Now let's go to the C Corp. The C Corp is typically your Apples of the world, your Microsoft of the world, things of that nature. Like I said, the LLCs is just the legal portion with the state. From there, you can select how you want to be taxed. 1040, sole proprietorship, a partnership if you have a partner, a S Corp, it could be you or a couple partners, or a C Corp, okay? So let's just say an example. You started a business, 2025 is a great year. You net profited $150,000, okay? But you didn't designate to be any type of structure. You remain as a sole proprietorship, which means all your money goes on to Schedule C. $150,000, that's taxed at the 24% tax rate. So right off top, what's that tax bill? 36 grand, okay? So as a sole proprietorship, you got to pay FICA, called self-employment tax. That's 15.3%. Can somebody do the math on that? $60,000. $60,480. You thought you made $150? No. $60,000 got to go to Uncle Sam. We haven't got to the state of Illinois. Bet you're a C Corp. I got my LLC. I went and got my LLC, and my cousin who do taxes out of his house gonna do my taxes. But you could have sat down with me for $500, got this presentation on on how to be taxed, and got the proper structure. Okay. Now the smart person who invested up front, and they told me what their biz and what their potential revenues. I said, okay, well it's just you. You just gonna be taxed at your 24%, 36 grand. We can't do that. Okay. But what we gonna do, since I set you up as an S Corp, I'm gonna put you on salary of $90,000, okay? That way, you don't have to pay the full FICA. You just pay FICA on this $90,000 that I made you pay yourself, which means $13,700, okay? You do the comparison just by selecting the proper entity and putting themselves on payroll, $10,000. Now, you can employ capable family members up to $16,000 and $100 annually, and they don't pay no federal income taxes on that. That's because that's the standard deduction, okay? You can pay them that. Let's just say you got a kid in college. Every business can provide educational assistance tax-free, up to $5,200, $5,250. So if you got a kid in college who works part-time on spring break, summer break, Christmas break, hey, you come be a part of this education program that we got here at Bell Tax or LLC Enterprises. We're going to pay some of that tuition. That's another deduction. All right, the Augusta rule. Okay, you heard about this. It's in Section 280. The IRS allows you to rent out your home up to 14 days in the calendar year tax-free. Where did the Augusta rule came from? Wealthy people. You know, the Masters that takes place in Georgia every year, in Augusta, Georgia, that's what this came from. Now, this is something where you can kind of use whatever your lifestyle is, things at home, to help you as a business expense, okay? Accountable plan. You can write up an accountable plan where employees, yourself, can be reimbursed for home office expenses, okay? So let's just say you got a home office or you got a garage or whatever it is that you use set mainly for that business, okay? You take the percentage of that compared to the square footage of your home, you add up all those expenses. So let's just say the home is 1,000 square feet, right? Your office space is 100 square feet. That's 10% of the home. So the total cost of like property, insurance, taxes, utilities, you would take 10% of that as the reimbursement plan. Okay. Whatever expense that you have, whatever membership that you have, if it helps you make profit, then it's a business expense. Okay. So with that being said, you just think about things that can help you run your business better. That's a necessary business expense. That's what it says. That's what the IRS code says. Necessary business expense. Okay. I'm not saying go out here and do anything crazy, but if you take a step back and say, is this necessary? Then it should be a business expense. Yes.
So would that include, like, say you had a timeshare and you had people come out and have you in your timeshare?
Yeah. So let's just say you had a timeshare, right? And let's just say you do a lot of international real estate investment. Let's just say across the country real estate investing, right? But when you come out there, you may go to the timeshare to do employee training. You may go out there to do some type of development for the employees. You may even come out there to have clients to show them other real investment opportunities. You're conducting business there, okay? Now, it might be nice to be there and have your toes out because it's cold in Chicago in February, but it has nothing to do with what's necessary for your business, okay? We got to get in the game. We got to get in the game, okay? Medical reimbursement. So let's just say, you can write up within your accountable plan to have medical reimbursement for your employees. You might be in a high stress environment. We need massages. I bring in a masseuse during tax season. It's stressful. It's not like per cap per entity. It's just what's necessary for the actual business. Yeah, I would say don't abuse it. Anything when it comes to the IRS, if you have a story that makes sense, then you have a fighting chance of winning it. If it doesn't make sense and it doesn't make sense, that's fraud. It's always the intent in everything that you do, right? Entrepreneurs are notorious for working all these years, getting to retirement, and have nothing there, okay? So when clients come to me with these tax strategies, I'm basically bullying them to open up a 401k, an IRA or something. I'm like, look, you got to put this money away. You won't be able to do this to the end of your life. You got people who out here who've been standing up, cutting hair, doing hair, fingers and back hurting. By the time they get to retirement, they had nothing there. So let's just say $90,000, you match it at 27. That's another deduction. You can match yourself at what you put in retirement. It's a business expense to match your salary. That $90,000 I put that person on, let's match it at 3%, measly 3% per paycheck, 2,700. All right. All that entity structure, consulting, 10, employing children. That's just one child. Augusta rule, accountable plan, retirement plan. That's 5 easy steps. Add them up, 25 grand in 1 year. The tax code is written for 3 particular assets. An asset, a business that's creating income, real estate, and capital markets, capital gains. Okay? We overpaying the taxes. Forbes says that entrepreneurs overpay, that 93% of small business owners overpaying taxes every year on an average of this amount, $11,000. The second problem, we just don't have a strategy. Most business owners just hustling. We just working. I'm like that too. It's stressful. And no real relationship with a tax professional. I mean, the tax professional, I mean an enroll agent or a CPA that specializes in taxes. There are a lot of CPAs, and it's a well-respected professional designation, but all of them don't do taxes. I'm about to buy this property. I'm going to put it in an S Corp. Nope, no, you don't. We don't put property in the S Corp. We'll put property in LLCs. Because if you put in a corporation, if it grows in value, you try to refinance it, you tax on it because you got to take it out of the corporation just to refinance it. So now you done put yourself locked into some type of taxation that you can't even control because you didn't even make the call to see if you should put the property into the proper structure. You just put it in the corporation. Solution. Get CPL with tax planning experience. Personalized strategy. And the real solution is me. That's the real solution. Here's all my contact info, my phone number, and that's you can catch me on IG, YouTube, and things like that. So, saving small business owners taxes, time, and stress. That's what I'm here for. Let's get in the game. Let's not complain about the game, okay?